You watch the red numbers multiply, the margin drop, and suddenly years of careful discipline vanish in a single afternoon of chaos. When you drag that stop-loss line further down the screen or jump right back into a revenge trade, your brain is convinced it's fighting to protect your capital. In reality, you are draining your account to protect your ego. Removing that emotion requires a systematic approach. We are going to build a 5-step ego detox protocol designed to sever your identity from your trades and ensure you execute your strategy without interference. Before we begin, you must have 3 tools in place. You need a tested trading strategy with clear rules, a dedicated physical or digital journal, and a commitment to trade exclusively with micro lot sizes while learning the system. The market targets your identity long before it drains your capital. Recognizing ego as the primary obstacle distinguishes the 1% of professionals who extract profit from the 99% who perpetually blow up their accounts. Step 1 of the protocol is diagnosing your specific triggers. Review the records for your last 5 losing trades and look for moments where you hesitated to close a bad position or ignored your system because a setup felt right. These behaviors stem from a well-documented psychological friction point known as cognitive dissonance. This diagram illustrates what happens in your mind during a bad trade. The first shape represents your internal belief: I am a skilled, profitable trader. The second shape is the reality of the market moving against your position. The resulting collision creates intense psychological distress. To resolve that distress, your brain forces a compromise. You justify a poor decision, invent new reasons to hold the position, or ignore your own indicators, simply to relieve the mental pressure of admitting failure. Look closely at this split-screen graphic. On the left is your stated intention, protecting capital and avoiding financial loss. But on the right is the hidden priority driving your actions, preserving your identity and avoiding the admission that you are wrong. The market's feedback loop is unforgiving. Unless you identify these internal triggers, your capital will continue to pay for your ego's refusal to be wrong. Step 2 directly attacks that identity attachment. We call it the identity separation exercise. This graphic displays the mandatory linguistic shift you must make. The emotional phrases on the left, like "I lost money" or "I was wrong," are permanently banned. Replace them with the clinical, objective statements on the right. "This trade did not work," and "my hypothesis was invalid." Speaking these clinical phrases aloud forces your brain to categorize the outcome as a mechanical result rather than a personal failure. You physically separate your self-worth from your tactical decision-making. Once your identity is detached, you move to step 3, establishing pre-commitment rules. Take a look at this interface checklist. Every parameter, your entry point, your exact stop loss, and your exit condition must be unconditionally locked in before your finger ever clicks the buy or sell button. You must then state out loud, "I accept this loss before I enter." Establishing these ironclad parameters beforehand serves as a structural safeguard. It revokes your ego's ability to negotiate or rationalize once the trade goes live and the pressure mounts. Step 4 happens after the position is closed. You must journal the ego. Instead of exclusively logging technical indicators or chart patterns, your post-trade review must dissect your psychological triggers. Here is the digital notebook template you will use immediately following any losing trade. You must answer these 3 exact questions. What was I trying to protect? Was I avoiding being wrong? And did I break rules to feel better? Answering these specific questions intercepts the self-serving bias, where you attribute wins to your own skill and losses to external factors. You neutralize the bias before it can corrupt your judgment on the next setup. With the analytical tools in place, you begin step 5, the 30-day mechanical execution challenge. For 1 full month, you will trade exclusively with microlots to practice absorbing controlled, low-stakes losses without flinching. This progress bar illustrates the single most important rule of the challenge. We are replacing your traditional monetary profit and loss chart. A winning trade is now defined solely as one where you followed your system perfectly, regardless of whether it made or lost money. If you execute your rules flawlessly for 30 days but still lose money, the psychological challenge is a success. It confirms you have established the discipline to separate your actions from your impulses. With psychological friction removed, you can finally focus on refining the technical variables of your strategy. To maintain this discipline long-term, you must view your trading through the lens of a medical professional rather than a gambler at a casino table. Notice the methodical movements of the gloved hands in this operating theater. The execution is emotionless, driven by rigorous training and proven protocols. When a medical complication arises, a surgeon does not panic or take the failure as a personal insult. They stay objective, follow the emergency procedures, and review the data afterward to improve their system. Your greatest risk of failure will occur during your first inevitable string of early losses. The temptation to abandon the ego detox protocol and revert to emotion-driven choices will be intense. Prepare your tools. Set up your psychological journal. Define your pre-commitment rules for your next setup, and begin your 30-day mechanical execution challenge today. Until you embrace the willingness to be entirely, objectively wrong on any given trade, the market will ensure you never become consistently profitable.
That's one more pattern, named, understood, and now in your hands. Becoming a profitable trader isn't about the next setup. It's about becoming the person who can follow it. Subscribe for your regular bite of wisdom. Train the mind, the trades will follow.